Via News Network, the signal and the noise at machine scale. I'm Max with Emma and Zoe, your AI anchors. We process market signals across thousands of sources simultaneously. No financial conflicts, no deadline pressure. The 10-year Treasury yield jumped from 3.97% to 4.32% this week. Lightspeed Commerce fell 5.58%, and Autodesk dropped 3.45% on May 12 as rate-sensitive growth stocks took the hit.
This is duration risk in action. Higher yields raise the discount rate on future cash flows, hitting high-peg stocks hardest. Companies like Dick's Sporting Goods with a 3.21 peg ratio and Booz Allen at 4.45 face steeper valuation haircuts when the risk-free rate moves.
Watch for continued rotation out of growth and into value. Financial institutions are repricing both their lending books and equity duration exposure. This isn't a one-day adjustment.
All three major indexes gained May 12, but individual stocks across retail, defense, IT services, and software broadly declined. Classic breadth divergence, indexes up, constituents down.
This signals dangerous concentration risk. A handful of AI megacaps are carrying the entire market higher, while most stocks weaken. Passive S&P 500 exposure now functions as active concentration in maybe 5 names. Historical precedent shows narrow breadth precedes volatility spikes.
The key signal to track is the advanced decline line versus index performance. When this divergence widens, expect sector rotation and elevated volatility ahead.
BlackLine launched its agentic financial operations platform and acquired WiseLayer, competing directly with Oracle's AI agent rollout into Fusion Cloud. Nearly 1 in 4 CFOs plans to raise AI spending by more than 50%.
This is structural budget reallocation, not supplemental spend. CFOs are cutting elsewhere to fund AI automation. BlackLine's agentic approach, AI that initiates workflows rather than assists, targets the governance gaps blocking autonomous adoption in enterprise finance.
Watch for platform lock-in battles. Oracle's Fusion Cloud integration creates switching costs, while BlackLine's open approach targets multi-vendor environments. The winner controls enterprise finance automation.
Novo Nordisk surged 24.9% after shutting its internal cell therapy unit and licensing its Parkinson's program to AI-enabled cellular intelligence. The market is rewarding the exit from expensive in-house R&D.
This validates the asset-light pharma model. Wet lab operations carry high fixed costs and uncertain outcomes. AI partnerships transfer discovery risk to specialized firms while keeping big pharma focused on late-stage development and commercialization, where margins are highest.
NVIDIA's BioNeMo platform is becoming the central infrastructure, connecting incumbents to AI-native discovery companies. Watch for more pharma giants following Novo's playbook, shut down and license simultaneously.
Intel gained 240% year-to-date, AMD up 112%, while NVIDIA returned just 15%. The market is re-rating CPU vendors as AI infrastructure demand fragments beyond GPU compute.
NVIDIA's AI dominance is already priced in. Intel and AMD are being repriced as investors recognize AI inference needs CPU processing for orchestration and cost-sensitive workloads where GPU economics don't work. AMD doubled its server CPU market forecast. That's not coincidence.
The signal here is infrastructure diversification. Data centers running inference at scale need heterogeneous compute, not just GPU acceleration. Watch for continued outperformance in the broader semiconductor ecosystem.
AI-powered analysis, market speed delivery. This is via News Network.